copies.
I mean,
These are.
I thought I would
I had extras that I misprinted.
break times. I told God, I said, it's gonna be a good one. Because, and the company is really good. And I've talked to them and stuff, they don't know everything they're using. Yeah.
You're right about that one.
Absolutely.
Had never done.
You can also stay. That's why, I'm stuck out here.
Give me like
Planning.
like 5.
Well,
I didn't get it mine.
yeah.
I had a meeting and don't know it offhand.
See, I like that. I like that. You get yours out?
No.
Yes, exactly. I like those. So we gotta do something else. I gotta go back to oh, and something about wait till next time. Maybe
I might do that.
Cause we're the last. It's a class in the mirror.
My first 17 calls.
Color green. Put a little green on it.
Yeah.
See, you know what
And then Easter, like you said.
Exactly. All the colors.
So-
Oh, I know. Exactly. Here and there.
I got another lady that was really
Festive, right? Exactly. Make us just feel good when you look down. That's right. Oh, so cute.
Yeah, this
Yeah.
is nice.
I like it. It's very cute. Yeah.
It's very easy though, and I don't have to mess with them again.
Press on?
No.
I was gonna say,
SNS.
I wanna learn how those work, but
I go for an hour, and it lasts for 3 weeks.
Well, don't choose me yet. I guess we'll see.
don't use mine as a.
They did.
I got it.
Thanks.
I can work it.
She'll see. Little nervous.
Yeah, okay. Thank you.
Like, I'm grown out from her. Like, this is not, this is me at home and I didn't do it. But it's like, you know,
Remember Billy from
the last year,
Mine's like 10 times
every year,
that.
you know what I mean? Yeah,
He's out.
it's amazing, thank you.
And a card and a lip balm.
We're on the back burner for a while.
Oh, wow.
That you needed to have. Assistant.
I went to a conference in Florida.
Thank you very much. You're very sweet. Thank you. And here's my card.
Thank you. Yeah, I love y'all's cards if you're.
Yeah. If you need it.
yeah, I'm not,
I'll go here.
You got flip
I
off.
get your card, I get
that's
mine.
fair.
Right, get back here.
Okay, sure.
Okay,
There it
I'm
is.
like, I wanna get you out.
You won't.
Oh, I see.
She's so nice about it.
This line here. You got everything.
You got it, thank you, yes ma'am.
I did, thank you.
Come in late and miss all the goodies.
No, I did not. Because they was like, they didn't get it, and I had to redo it, but I just got to do it.
Does Joey and his wife know what you're having?
It's through mine.
You should have two.
That'll be something new and exciting for you.
Very. Yep. Needless to say that I'm already buying.
It's far until the 4th.
No, it's not, that was yesterday.
Stephen is having a.
Oh, they're having a girl?
Yeah.
Yeah, we don't.
What do they have?
Huh?
There's a boy.
No, they don't have any. Steve doesn't have any. This is the first. Due in March.
Okay.
Alex has a boy.
That's what I was kind of just saying. Ready to have everything?
Very fun.
Yes, we do.
I'm Kathy Strobeck. I am the real estate CPA. I've been coming to Keller Williams North for, oh gosh, like 7 or 8 years doing this class or a variation of this class. around this time of year because it's people are thinking about taxes. I'm really thinking about taxes. I'm really into my busy season right now, which I'm grateful to be busy. And what we're gonna go over today, I gave you 2 documents. There's one document that has a lot of numbers on it, a lot of percentages and a lot of boring stuff. However, and I'm not gonna go over that necessarily because you'll be sleeping and I'll be talking to everybody in bed. So, but it does have the information about the changes like in the tax brackets this year. It tells you the standard deduction change. It tells you the mileage rate change, which is important to you as real estate agents. It is 70.5 cents now per mile, which is, in your industry, that is a $20,000 to $40,000 deduction, generally, what I see. And then there's other things on here. The IRA has gone up, contributions is $7,000 this year instead of $6,500. If you're over 50, it's $8,000. And there's a new thing, if you're between 60 and 63, which is a strange number, you can contribute up to an additional $11,250. Which, okay, what about 64? What about 65? So, but anyway, I don't question, I just give you information. Annual registration with the Secretary of State. If you have an LLC or any entity that you have registered with the state, you must file your annual registration by April 1st. It is $50. If you miss that deadline, it's $75. If you miss it by September, they will dissolve your LLC. And then it's $250 to get it reinstated. If you don't know what that is, please ask me and I'll help you work through that. The interest rate is now 8% per year, which is, that changes every quarter. It was 4%, it's gone up with everything else, 8%, they still adjust up and down. So
Kathy, is that on here?
it is on
Yeah.
the
Changes in
One.
taxes.
one with all
Oh,
the,
gotcha.
yeah, I'm sorry, I'm jumping around.
Oh, yeah. Okay, so right there. Oh, okay.
You talked
about the mileage.
Yep. Yeah, I jumped around, I'm sorry. I wasn't gonna talk about this, I said. I did anyway.
You got excited.
Well, yeah, I thought I'd hit the high points, not realizing that they're all high points, so, okay. Some of you may have been paying estimated payment tax penalties. I can help you with that. I can help you with estimated payments. I can help you being an S corp and reducing your taxes. There's lots of things and ways if you're not already in that situation that I can help you. Last thing, HSA contributions, which is the health savings plan, is the very last thing on the second page. It's up to $85.50 per family. So that's where you put money away and you use it for like co-pays for medical. Yes, ma'am.
What, did you say was the new mileage?
It's 70.5 cents per mile.
What is it, 70?
That is, let's see what that is.
It's towards the bottom of the page with the
Bottom of
bracket.
page 2.
Page.
Bottom of page 2.
Alright, Frank.
Oh, there is a page 2.
There you go.
Yeah, flip it over, there's a page 2.
We were totally lost on this.
I'm right there with you.
Sorry.
So HOA is what?
HSA. Health savings.
We're so easy to do.
Yeah.
A lot of information.
It is a lot of information, that's why I wasn't gonna go over it, so never mind. Yes, ma'am. Oh, yes, sir. Excuse me.
Yeah.
Is that IRA change at all?
The SEP IRA is the same as,
Last year.
it's still let's see, I think I put that in here. SEP IRA is still 25% of your earned income, which is your W-2 income. Or if you have a Schedule C, it's your net income at the bottom. You know what I'm talking about?
Yeah. I have it, neck.
Alright, so go to the next page, the list, which that was what I was gonna talk about. And the biggest question I get, other than how can you help me save more taxes, is what can I deduct? Especially from new agents, anybody who's a brand new agent or just a year in. So, people wanna know, and we all wanna know, exactly what we can take as a deduction against our business income. your business income coming to you as a 1099 is a good and bad scenario. It's good because you can deduct stuff like this. You can deduct things that are your personal expenses that are not normally deducted if you have a W-2 job. However, you are taxed for self-employment purposes on your income from 1099, which can help you with that. The expenses that you can deduct, what I tell people to start with is anything you do for your business that you probably would not have done in the normal course of your life. So haircuts, no. Nails, no. Makeup, no.
No haircuts.
No haircuts.
What about food?
What about
Food.
if you're out on your doing work, yes.
With like client,
Yes.
just put it on
You're
the
with the client,
agenda
yes.
and then
Absolutely. If you're with a client, if you're out prospecting, if you're in a caravan, if you're at a conference, if you're doing education.
You take me out and we talk about real estate.
That's right.
Uh-huh.
You go with me and we talk about taxes
Is
for a minute. Did you claim taxes yet? No. Okay, well, we can
That's
deduct that.
How much is deducted though?
50%.
50%.
That is the tax adjustment, you don't need to worry about that. So you need to deduct or put in your expenses, your entire amount. Your P and L, which is profit and loss statement, income less expenses equals net income. Net income is what you're taxed on. Your P and L will show that, and then there's a tax adjustment on the tax return that your CPA does, I do. Or TurboTax, if you do that, please don't. But yes, put it all on there. And pretty much anytime, I mean, my husband and I go to dinner and bless his heart, he gets to listen to me talk about my clients. And he helps me, he's I'm a little bit like this and he's very like this, so he helps me
We need
settle. We need some
balance.
temperance, that's
Yeah.
right. So we do that sometimes, I get to take that. Travel, let's start with the list. I'm not gonna jump around, that's very confusing. Okay. Accounting and tax prep fees. All of my fees are deductible. Anything I charge you, any forms I file for you, if I do payroll for you, if I do bookkeeping for you, all of those fees are deductible to your business. Broker's fees. You pay your broker, what is it, like 18,000 here, totally. Commissions to others, if you use another listing agent or you were gone and somebody does your sale for you and you pay them a commission. That's a commission expense to you, but you're giving money to them. Desk fees, you're paying for supplies and copies and the receptionist and to sit at your desk and whatever else y'all do here. Listen to me. Education expenses, when you got your license. If you do a conference, like the Georgia Real Estate Conference, that I got a hold of lip balm at when I was down in Panama City. All those things are deductible, all this education. If you go out and say, I wanna learn about 1031 exchanges, and I'm gonna take this seminar, that's deductible. Anything related to your business that you do to educate yourself. FMLS, MLS fees, of course. Gifts and flowers, closing gifts, gifts for your colleague that helped you with the sale. Stuff like that is,
Is that still $25?
well, yes, but we
marketing,
call it marketing,
marketing.
advertising.
Just want to distinguish for those that are new
Let's see.
that there is a dollar amount.
There is a dollar amount, but
But-
frankly, we don't listen to it.
Mm-hmm.
If you went to audit, yes. But I think it's absurd. You can't even get a box of cookies for $25.
Yeah.
So, and they should raise that, but you know, whatever. So we put it as marketing or advertising.
So the gifts, gifts go in
In my opinion, yes.
It's not marketing.
I'm asking
Is
for a
it per
friend.
As long as you
transaction
put
or
your name on
per
it.
client?
I'm sorry,
Is it per transaction or per
Transaction.
client?
per gift. Like if I was buying you a box of cookies and I was buying your colleague a box of cookies, those are separate. And if I bought them together.
So you said it falls under marketing, the gift?
I put it in the marketing.
Right.
Yes, ma'am.
But my question is, so technically you could be marketing and advertising by giving your client a manicure every month, so you can just buy gift cards at that place. Use it towards marketing,
Yes.
and your client gets
La
the,
la 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 la.
but that's legal,
No,
right?
It is, it
It's
is.
just loophole.
It is a stretch, but we are here to
At your favorite nail salon?
At my favorite nail salon with the services I get, because I only give the best.
Can you put your name on it? Then yes. you can.
Right, that's why I have my hand up, right? So when you go over yonder and you buy the $100 vase, do you have a stamp with your name, a sticker that you can put on the bottom of that vase? Right?
Or business
Call
card,
me.
because we had to order
No,
5,000.
no, no. Something you can, okay, so old school, right? Something you can attach to that thingy, that stays on that thing.
Alright, let's go.
What about, yes.
What about,
What about taking a client to a sports game?
okay, so that's different, let me look into that just a minute. But that's not on here.
I didn't.
Entertainment is not deductible this year.
Oh, wow.
That looks like.
Like
a-
dinner is not?
Not.
What about for the 2024 year? It's not?
It is not. It has not been for a couple years.
Different entertainment.
Sporting event.
Huh?
Movie.
Huh.
Anything,
Dinner?
dinner is meals.
Oh, meals, that's right.
So anything where you're golf.
Oh.
Wow.
I had a client, I have a client who buys Braves tickets, season Braves tickets, and you know how expensive that is.
Yeah.
And we used to be able to deduct that,
Yeah.
but with the new changes in 2018, they did away with entertainment.
So no.
Hopefully, it'll come back.
Is there a way to get around that?
No.
No,
No.
my lender called,
Absolutely
left
not.
me a message, said, we didn't renew tickets, Braves tickets for this year, because I guess they
'Cause they
couldn't
can't
do
They're
that.
not, yeah,
And
they're
they
not
just
deductible.
price went
Yeah.
up.
Now, if you go to the Braves game and you buy your client beer and hot dogs, that's meals. If you go to the golf club and buy dinner at the 18th hole, or drinks.
But if we get a gift card for them to go play there,
Well, the gift card is different because you don't know what they're gonna
that's
do.
marketing.
That's right. I mean,
Not really.
Not really.
you gotta be careful.
Well,
You gotta be careful. I mean, don't be greedy.
right.
I mean,
What
Gift
about
gift cards are, I don't, not real comfortable with gift cards. Because you could go get one, say it's for your client, and then use it for yourself.
yeah,
And, you know, that's the reality. That's
sole
what-
purpose.
So just, don't be greedy.
Even though we
No.
attach our business card and the
No.
gift,
But the business card doesn't make
It
it
doesn't
marked,
attach.
right? It has to be
Sticker.
engraved, it has to be affixed to that item in order to be marketed.
$25.
I'm not aware of that.
Okay.
I heard
But-
You just got freedom.
But yeah, I mean, just, you know,
Well,
be-
The stuff that I ordered automatically had my stuff, my
I like
info
to
in
push
it.
the envelope. I do like to be the gray area, but I am conservative about certain things, and that is one of them.
Getting audited is no
Getting
fun.
audited is not fun.
Asking who has been
But if
audited
you-
before.
I've been through audits with my clients and they had no adjustments, which that is the goal. We wanna go into the IRS, present our nicely documented and supported profit and loss statement and all the receipts they could ask for, or statements, and have them go through and go, okay, you did good. And then they'll leave you alone. I had a hairdresser, 30 grand a year, nothing, makes, you know, very little money, but it's a cash transaction, used to be, when it was $20. Now it's 70, but she got audited 3 years in a row.
Oh, jeez.
No, she makes no money. It doesn't matter. They pick, they have
Once you get
certain,
audited, don't they come back to you subsequently? Like I got audited and then they came back twice.
3 times. I finally had to say, this is harassment. Stop. Because every year we had no adjustments, because I'm like, I am doing these. I'm a CPA. She is trusting me with her books. They are right. But I had to go and say, we're not,
Yeah, they're not
no more,
always
close
right.
it up. We're not doing any more with her. And they stop. You just have to know where to, you know, and that's part of, I do IRS representation. Like if you get a notice and they're auditing you, I do that stuff. I also do people who have not filed for many years. I'm advertising. I have a client right now, he hasn't filed for 5 years. So we're bringing him current and then we're gonna set him up on an installment agreement. Get him in good standing so he can go buy his house, you know, it's just, it's, I enjoy it, I'm a complete nerd, I know it, I'm okay with it. But it's very interesting to me,
You
so,
deal with stock option trade?
oh yeah. Unique. Okay, let's keep going. Excuse me, home office, this is a great deduction, because these are personal expenses you never can deduct anywhere else. utilities for your home, HOA fees for your home, pest control, lawn service, cleaning, everything, insurance. You take a portion, we take a portion of your home as a home office. The definition for home office is if you do administrative tasks. Like, yes, you have a desk here, or you pay for your desk fees here, but you go home, I know you all do, and you are on the internet looking at Zillow or looking at whatever, and
Never
doing your
Zillow.
contracts. Sorry?
Never Zillow.
Never
That's okay.
Zillow?
Just a
Okay.
little sidebar.
Tell me.
Zillow's the antichrist for realtors.
Okay, no, I will not use that anymore then.
Realtor.com.
Right.
Realtor.com, okay, I've used that. Okay,
And
well, then I get my email from my Keller Williams agent that says, here's how much your house is. So that's a great thing, you take a portion of your home, I use rooms. So let's say you have a 3-bedroom house, that's 3, kitchen, dining room, living room. I put in like 1 more room for like hallways, and if you have a master bath, big master bath. So that's 8 rooms. You use a bedroom for your office, it's 1 of 8. That's your ratio for your home office. Mortgage interest, real estate taxes, all of that, yes ma'am.
I have a quick question.
1 second, she was first, sorry. Go ahead.
Actually, my question was gonna be what the portion is, and you're kind of answering
Go
it
ahead.
right now.
So let's say that you have a home office and it's a rather large space.
Mhm.
And the HVAC on that area goes on kaputs. So you have to spend all kinds of money for a new HVAC system that runs the office area. Is
Only?
that too gray? No,
Only?
No.
Okay, no.
okay.
You can limit it to like, if it's, say it's the downstairs and there's 3 rooms.
Okay.
You could feasibly do that.
Okay.
That's a good question. If you, like, take your bedroom and you convert it to an office, you add like shelving and you add a desk and whatever. All that is direct expenses for your home office. All that is deductible, it's not in the ratio. Yeah,
So we have 2 dedicated spaces for home
You too.
office,
2 of 10.
right? Oh. But we've always been told by CPAs that that's the fastest way to get audited.
I disagree.
And we,
Especially now,
yeah,
not
especially after COVID.
Work from home.
So many people are working from home.
Yeah.
I haven't seen the recent percentages, but it was like 70% are now working from home before. I know everybody's like, the government's going back.
So
and
you can
California
take,
back.
I'm sorry, so let's say your bedroom is 10% out of your square footage, let's just say,
Yes.
from your entire house.
Yes,
So what you're saying is you can take mortgage, repairs,
mortgage interest,
mortgage and interest,
no,
whatever
mortgage
you
interest
want.
only, not
Mortgage.
payments. Interest,
Interest on your mortgage.
Interest only, okay,
On your mortgage.
real estate taxes,
and real estate taxes,
utilities,
right,
homeowners insurance.
oh, that's a lot.
repairs.
It's a lot.
That's why
And
I don't- that's
repairs.
why we don't do it.
Yes,
But you're only taking 10%
percentage, that's correct,
percentage of that.
yes. And if you're working with me, if it's something I do for you, you do not have to
So
do
if
it.
I have 2 offices, which I do,
2
so-
of 10, 2 of 8.
Okay.
I do that, I mean, I have my office and then I have my conference room, which is my dining room because I've got a big table there and lots of space. And I meet clients, so it's a great deduction because you don't get to deduct those things anywhere else. I mean, you get to deduct mortgage interest and real estate taxes. I don't know how much you know about that, but the SALT limitation, does that ring any bells for anybody? Short story, there is a limitation on the taxes that you pay that you can deduct on your your itemized deductions. It's $10,000. So if you have a house and your real estate taxes are $5,000 and then you have a W-2, your spouse has a W-2 job and they withhold $7,000, you've reached that limit that you can't deduct. So it's one of the great things, in my opinion. Great deduction. One thing to be aware of, if you are depreciating your personal home, which we do when we do the home office, you have to recover that when you sell your house. Which is not a bad thing because what you're looking at is the difference between your high tax bracket now at your top of your earning years with yourself and your spouse, and capital gains taxes, which is 10% and 20%. So that difference in taxes is what great tax savings is. That's really going into the weeds. You wanna talk about it further,
That's just kinda.
let's meet. That's way up here. And
Are the business deductions taken separately if you took the standard deduction?
no, wait,
So it's still cumulative.
the business deductions are separate, yes. What happens is, say for instance, on the mortgage interest, this is what you're asking about, you deduct the amount that you took on the business. So let's say your mortgage interest is $10,000, you take 2,000 on your business. You deduct that on your personal, and your mortgage interest on your personal is only 8. Make sense? So yes, you do adjust it, but in that case, you've got the SALT limitations. And also, if you're taking the standard, which right now the standard is really high, it's $30,000. So a lot of people, for married filing jointly, a lot of people are not even itemizing anymore, which a lot of these things are gonna sunset in 2025, this year, at the end of this year. There's gonna be, next year at this class, you need to come because it's gonna be, there's not many changes this year. Next year, there's gonna be a lot of changes.
Repeat again what you said about the 30,000?
The standard deduction for married filing jointly is about 30,000, no, exactly, it's on the list.
Yeah,
It changes every year, so I don't keep track. Itemized deductions is either standard or itemized. Itemized deductions is your real estate taxes, your mortgage interest, your charitable contributions, things like that. So most people are not doing itemized anymore because the standard is higher. So say your mortgage interest, real estate taxes, charity is $17,000. The standard's 30. You'll get the standard, you take the standard. So you're getting, in effect, another $12,000 of tax deduction that you wouldn't have gotten. That standard deduction may change to the end of this year, we'll see. We'll see what Trump does.
What's the standard deduction HOH?
Head of household?
Head of household, means you have a dependent child, minor dependent child, and you're a single parent.
Okay, gotcha.
Interest expense, back to my list, interest expense, any interest for like business debt. If you have a business credit card that you're carrying balance, those things are deductible. I call them just in case expenses, insurance. Insurance for health, liability, life insurance is not deductible to owners, by the way. Errors and omissions, I don't know if y'all have special insurance for real estate agents.
Yeah.
I have errors and omissions, it's really important to me. Your keys, licenses and permits, you know, your real estate license, if you pay a renewal fee, or if you, when you got your real estate license, I assume there's a fee. The fee I mentioned, the annual registration that you have to do every year, the $50, that's deductible, all that. Meals with clients, we talked about that briefly. Networking, advertising, marketing, if you go to a Keller Williams networking event, if you take your client out for a meal, if you had to pay to come to this, just to listen to me speak, stuff like that. Yes, ma'am?
How come sports and entertainment has been separate from networking? Because that's essentially what you're doing.
That's what the IRS said. I don't know. That's just, it's the rule. I mean, there's some things that are for specific rules, literally laid in the code. One of them is golf dues. So, yeah, just
Or
because
cannot.
cannot take, it's sporting event. Golf dues, you can't.
How about altitudes?
Sorry?
How about altitudes?
Yeah. It's sporting. It's, you know,
Networking.
you can try. I discourage it, but if you tell me you wanna do that, that's your
But
decision.
if he has like a client appreciation event, that's okay?
If it's a sporting event, no, it's
Or
just,
not at a sports event, but just like a
Membership in the governor's club.
At a neighborhood
That's not
club or
deductible.
something.
country club dues are not deductible.
Right.
It depends on what you're doing, I mean, if you,
I'm having a floral arrangement class this weekend for my clients.
I mean, I think that would be deductible.
It's an
Floral
event.
arrangement, it's an event.
It's not a sporting event.
Yeah, sporting, literally,
Yeah.
Falcons tickets, Braves tickets.
Yeah.
Hockey, golf, I keep saying golf, because that's, I mean, I have people go to the governor's club or the Atlanta Country Club or whatever. And I'm like, no, sorry, but no, because they're expensive. Organizational costs, so when you set up your business, I charge a fee to set up an LLC for somebody, you can deduct those things. Your fees to set up with Secretary of State. If you, anything like that, you're allowed to deduct as part of your business expenses. Phone, so important to you, so important to everybody. You do business use of your phone, and the best way to do it, in my opinion, is to literally take your cell phone bill and go through and say, this is business, this is business, this is personal, and get a percentage. Do that for like 3 months and carry it forward. Just use that amount.
Yeah.
Because that's what the IRS agent will do. If you are audited, they will take your bill and say, tell me what's business, tell me what's personal.
So you don't take your monthly amount and, God, I've been just turning in my monthly amount
You take a percentage,
percentage, I'm gonna do a percentage.
that's what I was saying, well, you need to do,
Okay,
you need to do a percentage, yeah, 80 to 90% could be, it's very possible.
okay.
In your industry specifically, it's very possible. But again, this is what I advise people to do that ask me. Take your cell phone bill for like 3 months, do the work, and see what your percentage is. And stick to that percentage, because then you got proof, like, okay, here's what I did to the IRS agent. That's always what I have to think about. What do I have to present to the IRS? How can I defend what I'm saying?
That's my question, so that means that we have to keep it every month, the
It
bills, and do it that in case
Not
that we
every
get.
month.
She
I
said
would
3 months.
just do it for 3 months
Just
and then
said
kind of
3 months
But
and
what
lose
about
that
if we,
figure.
if we get audited,
audited.
yeah, what about that? We
Well,
have
I
to
mean, I
show
would
them?
keep your receipts. They could ask for it.
I've been audited, they asked for everything.
Yeah, they could ask for it.
Okay.
I've been audited and they didn't look at anything.
Mine was,
They asked for everything. I had
they
a
haven't
huge
checked my
stack and
prostate
they
when I
checked
was in
nothing.
there. It was
They just said you owe it. Hey,
very
Honestly,
uncomfortable.
it depends on how organized you
not
are,
happening.
Sorry for individuals.
how much you
Okay.
separate or can prove you separate business and personal. You must, I cannot tell you how much enough, have a separate bank account for your business.
Yes,
You
and
must.
separate credit cards as well, right?
I encourage separate credit cards. Other than the fact that going to IRS audit, it helps. It also helps you keep your business and personal expenses separate. So what if you and I go to Starbucks and go have a coffee? It's deductible, you put it on your personal card. What are the chances that in 6 to 8 months you're gonna remember that you and I went to Starbucks when you go with your girlfriends all the time? You're not. But if you have a business credit card or a business debit card, your business bank account, it's there. It's in your account. You see the expense, Starbucks, oh yeah, that's right, Kathy and I went. Yes, ma'am.
In that case, we still, or you recommend us to still keeping the receipts
If it's under $75, you do not need it.
on the
If-
separate card, okay.
If it's on a third-party statement, i.e. a bank statement or credit card statement, you do not need to keep it. However, I encourage you to keep it. Get one of those accordion files, buy it that has it by the month, and just throw that receipt in there and leave it.
So, which leads us, I'm sorry, to, I think the next thing is the Quicken that you put on for accounting.
QuickBooks.
What do you recommend? So I'm in a little dilemma, so I used Mint for many years and Mint went bye-bye.
Oh, did it? That's
Yeah, so what would you recommend to do our expenses, some budget reports, like,
I like
before you
QuickBooks.
present it to the
Yeah.
account, right, before you present it to you, we can use on the phone.
I like QuickBooks, however, it's getting very expensive. Intuit is a monster.
I saw that, yeah.
They've raised their rates every year for like the last 3 years. I've been telling people to use Xero recently.
Zero?
It's a little cheaper, I think.
Mm-hmm.
I don't really know. Any electronic checkbook you can buy. I mean, even I have people that use Quicken.
What's
Which-
expensive? Like, is $35 a month expensive?
Yeah, that's expensive.
Yeah, I think so.
Really?
$30 to $50 a month, yeah.
Because that's what like quick,
I mean,
I mean,
but on the other hand, I don't know how much Xero costs. I don't know how much a FreshBooks costs.
Have you heard about Simplify?
No, I haven't heard.
No.
Maybe. I don't know.
With them.
I think I've heard of it, but I don't think I've seen it.
I mean, it's less expensive than having personal bookkeeper.
True. The other thing to put in there with those types of like software programs, like Mileage IQ, is something that people in your industry are using quite a lot. Mileage IQ seems great. I've seen the log for it. you're familiar with that, because you do have to have a mileage log to deduct your mileage, or if you get an audit, that's what they're gonna request. Retirement accounts and investing, you can use your company to do an employer match against your retirement account. You can set up a 401k for yourself, it's called a solo 401k. You can do a SEP, you can do IRAs. There are lots of things as your own business, as a 1099 contractor, you can set up for yourself for retirement. The good thing about it, in addition to, it's your money, obviously going into your account, is you do get this employer match. So if the IRA, or the 401k, is 22,000, I think it's 23,000 this year. You can also have your company contribute an employer match. So you could put in more than you could if you worked a W-2 job. It's fabulous, and deduct it.
Where would you go for that?
Any brokerage, any bank. If you have like a Fidelity, Charles Schwab, you go Wells Fargo, go to them, tell you on a solo 401k, if you have a business.
Can you just repeat what you said again?
Which part?
That, the one that you're matching, that you can go to the bank and create an account.
You just have to go to your bank and
Not to the bank, I mean to any.
Broker.
any broker. If you have a
Edward
relationship with
Jones.
Charles Schwab or Fidelity, another brokerage account, you can go to your guy and say, hey, I wanna open a solar 401k. They'll be like, great, let's get it going.
It's 22. Like my credit union, they
It's
have
23 this year.
SEP, I can have SEP or IRA. SEP, like the regular IRA or SEP IRA.
Depending
Those
on
are my
what your company
choices.
structure is. Because the IRAs and SEP IRAs are less, you're gonna give yourself less. With a 401k, you can actually even put your business into a loss situation to fund your 401k. So, good stuff.
A what situation?
Loss. Net loss. So
How do
you're
you
not-
have to be structured to be eligible for the 401k? Is that?
You have to have, first of all, you S corp,
Okay,
you have to have wages,
okay,
you have to have payroll,
okay.
which as an S corp, you have to have payroll. So that's another class.
Yeah.
And I'm glad to talk to anybody about that. Salaries and wages, contract labor, those are deductible. Again, for yourself, for your employees, for anybody that helps you, if you have somebody that comes and like files for you or writes contracts for you. Travel, we talked about that, business related travel, you fly down to Florida to go to a real estate conference. Hotel, flights, parking, all that, utilities for the home office. Vehicles, now we talked about mileage, and we haven't talked about actual expenses. So there's two different ways to deduct auto expenses. Standard mileage, which I told you is 70.5 cents per mile right now. And in your industry, that's in my opinion, the best deduction. Or actual expenses, which is your gas, your oil, repairs. You have to keep track of that, and in addition to that, you have to keep track of what percentage is business and what percentage is personal. And no, you can't take 100% because you're gonna go to the grocery store. You're gonna go take your kids to the movies. You're gonna do stuff in that car, especially if it's your only car. So 100% is not great, it's family.
What if you have multiple cars?
Standard is really better to me.
So what's that percentage look like, 50%?
It depends. Again, you have to have a mileage log, you have to have a log saying, this is what I've done and what, you can estimate.
And how often do you need to record in that log?
The
Every day?
actual,
Every
or the
time you do
standard,
it.
the standard mileage.
I don't understand.
I do
Every day. You need to have a log, literally, a daily log.
Can't you just use the log generated by the app?
Yes, that is a log. Absolutely, that is a log. I mean, that's why,
You just turn it on.
And what's your thought about leasing?
That's the thing,
that's another conversation.
oh, shoot, turn it over.
Well, just,
Of course, I'm glad to talk to you about it. So other thing, websites, if you have a website for your business, that's deductible. Expenses for office supplies, paper, ink, printers, if you go buy folders, if you do like things to advertise that you go and set at your, biscuits and more, and then have a little thing where you can set your thing up for people to take, your cards, anything like that. If you buy, like I bought some really lovely stationery to write thank you notes on. That's expensive.
Do I have to have the receipts for all that?
I'm sorry, I
Do
can't
I
hear
have
you.
to keep all the receipts for all that, or?
Again, use your business card, debit or credit card. If it's
Yeah,
under
that's right.
$75, no.
Okay.
But it, again, IRS agent's gonna ask for stuff, even if I will come back and say, well, that's under $75, and she's not required to take it, to have that receipt.
Okay.
But they will ask, and the more you can produce, the more likely they'll leave you alone.
So my bank statements pretty much will cover
Bank
that
statement works.
for my, okay.
And the reason is cause
Under
it
my
has,
business.
okay, chicken salad chicken, $40. It's from a third party, through a third party. So it's not like it's very difficult to spoof that.
Okay.
So
But you
they
still
say-
need to account for that you were doing business at
Yes.
Chicken Salad Chicken
Yes,
and who you were with.
correct. They wanna know who, what, when, where, why.
Oh, yeah, okay.
So, but it's probably pretty easy for you
Right.
as agents, cause you have a customer you're dealing with, and it's probably a lot of stuff all at once, I would think. Not sure about that, but that to me makes sense in my brain.
So question for you.
Yes, ma'am.
So let's say last year I bought 4 new tires and I had work to be done on the car, which is another $1,500. So you're saying either or, either I take that or I take the mileage.
You have to pick one and stick
Okay,
with
so
it.
I'm picking the mileage,
You have to pick one and stick with it.
yeah, okay.
And it's a
Yeah.
percentage of the other if you're doing the itemized, not a full 100%. So 75% of all the expenses.
That's right.
Yeah. Okay.
Standard mileage is easier.
Mm-hmm.
It also.
Is it though?
I think so.
I mean, the tracking part, I'm just, I was just telling Lisa, like, I'll be in a car on my way, I'm like, oh crap, I forgot to turn it on. And then forget to turn it off, and it's so difficult to remember to turn it on and off for every time that I'm going on an appointment.
I think Mileage IQ does it for you. It's
But then you have to
it's
enter
GPS.
in.
Yes, you have to, you're gonna have to work.
I don't want to work.
You have to work.
But okay, so the question then is, well, why can't we just after the fact, right, or on the weekend, sit down and say, okay, I'm gonna do all week's work, and
Because
on
we're
this
not
day,
doing that.
I travel like 40 miles, on this day I travel this. Do they physically need to see your car go from here to here to here to here to here to here? Or do they need to see it on the app that you did this, you did this, you did this, and this many hours?
If you do the audit, if you go to audit, they're gonna want a mileage log.
Right, but if you have a mileage log in your
Then
app,
that should be fine.
that's it, but you don't need to turn it on, cause that also drains your battery, right? So you can just, at the end of the day, or at
End of
some
the week,
point,
yeah.
just plug in.
But you
Okay,
gotta
today
do it.
I left home at this time, now I'll get home at this time, and this is approximate amount of miles, you can just kind of ballpark it.
Sure.
By like
So-
3,000 miles.
At the very, 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 very,
Do
very
you have an app?
I do, I use Stride.
I use Everlens, and I love it because
Ever-
it
What's it
pops
called?
up, it's called Everlen.
Everlens?
Everlens.
Everlen.
Everlens,
Right,
like an
yes.
Everlens?
It's like a white arrow in a teal background, but anyway, every time I stop, few minutes after I stop, it asks me automatically,
Are you done? Have you
no,
stopped?
categorize your route. And sometimes like if I show all day Saturday, I won't do it, I just put it all together and I do one swipe. So it's like I have a swipe right for like this way, left personal, right work. And then I log in
Tinder
and
for
it
everyone
gives me the
else.
whole spreadsheet. And then when you file taxes, actually you have, it's asking you for your business mileage and asking you for your personal mileage, it's asking you.
So, I
So
mean,
you
my
already have
advice,
it there, there's no thinking.
my advice to you
It's
is,
right,
have
and
to
it
think
sends
about
me,
it.
it already sent me my tax document for last year. So I just
That's
upload it
awesome.
to my
How much a month?
CPA.
Everlens, okay.
I
My
think
advice to you
it's
is-
like $40 a year,
Yeah.
but I
Find
would say I love it.
What's
I love
Everlane?
Everlens.
It's
Find
somebody
something that will
recommended me
work
like
for you.
that app 4 or 5 years ago.
Okay.
And it turns on automatically, and I can turn it off when I go on vacation.
Alright, let's get back to this, I only got
Anyway, I
another
can
10 minutes.
Okay,
Having
thank
too
you.
much fun.
Find something that will work for you. At the very, very least, I tell people, keep your oil change receipts. When you go get the oil change in your car, your odometer mileage is on there.
Yeah.
Or on New Year's Eve day, whichever, take a picture of your odometer for your notes. At the very least. Cause then you can say, okay, January 1st, December 31st, I drove 60,000 miles. I'm gonna estimate that 70% of that was business. That's something. If you go to audit, they're gonna want a recreated daily log. So, my advice, find something that works for your brain. It's got to work for you, so if you buy something, it's just like buying a Nordic track and you sit it in your house and hang your clothes on. Doesn't work unless you do it.
I'll be real quick, real
Yes,
quick.
ma'am.
So I bought a new car last year as a tax write-off, that's the only reason I bought it. So I'm driving that car some, but I drive my other car most of the time for real estate. I like the mileage idea because I'm hardly putting any miles on the car I bought for real estate. Do I have to buy the car, do I have to drive the car I bought for real estate and that's what the mileage comes off of?
You don't have to, but did you
might-
write,
it's
did
just
you
a
write
license.
that car 100% for real estate?
Uh-huh.
Like your CPA let you do that? Or did you do it?
Well, we had a conversation, I said, it's happening. So I did it, and I think I probably got 80% off on it. I think it was 80%.
You need to drive the car that you claimed. And you also have to now claim actual expenses, which is gas.
Which I have been, I think, I can cover everything, okay,
And when you sell that car, you have to recover
right,
the capital gain.
5 years.
Sorry?
You gotta keep it for 5 years, I think he said. More? We'll worry about that later.
Yeah, I mean, and people don't talk about that, people don't realize, yeah, you get this big expense, okay, you probably, I don't know how much you pay for the car, I'm not gonna ask, but you took this big expense for this car this year. Great, that's, whatever, 60 grand, 80 grand, whatever it is. Next year, you can only take $7,000 because that's all your gas, that's it. So you get a big expense this year and nothing for the next 5 years. Whereas with mileage in your industry, 20 to 40,000 miles is more than this, but I half it because it used to be 50. $20,000 expense on the 30 to 40,000 miles every year with no depreciation recovery and no tracking your gas, no tracking your repairs, no tracking your business use because you got your mileage out. So in my opinion, I advise the mileage in your industry specifically, because y'all drive so much. It's massive. So that's,
And the tire
that's- yeah,
things are
and
real.
Anybody you talk, and this is this is weird, because you talk to one CPA, you talk to another CPA, you go to H&R Block or wherever, you're gonna get different results on your returns. Because we have different opinions about things. I don't like writing out cars, because you use that car personally. It's your personal car. Unless it's a fleet vehicle, like think of a UPS truck, think of a Papa John's truck, think of a work truck that's for a plumber, things like that, yes, that's fine.
So what you're saying is that Jim needs to provide a car for all of us.
There you go. That sounds great. Can I get in on that? Okay, last two things. One, your business expenses. If you do coaching, if you have legal fees, if you do annual registration, we talked about it a couple times. All those things, again, you're improving your business, you're doing things specifically for your business, you deduct that.
Does that include like your fees for a financial advisor? Or is that just personal?
That's personal,
Because they're
because you probably would,
advising you on business stuff.
you probably would have a financial planner anyway, in spite of your business. That's interesting, I'll have to look at that. My first gut is no.
Because they manage my solo 401k and
I don't have an answer for you.
how much I can
I'll look.
contribute to
I've
that.
never done that. Now, the 401k, yeah. But like if you have a personal brokerage with your investments and stuff personally, I think so. For your 401k, yeah, I see that. I'm okay with that, that sits okay with me, but
I mean, that's part of the whole thing, but
then how do you separate it?
I kind of know.
So Z is the good night's sleep you'll get working and knowing about all these expenses. So that's my presentation. I hope that some of the documents that I sent to you are helpful for research or for your reference.
I have a question.
Yes, ma'am.
So, being the beginning of the year, what should we have in place to minimize our tax, bill for the end of the year?
Probably the biggest thing you can do to help yourself if you're a new agent or haven't done this yet is to set up an LLC that's an S corp. And then after that, it's definitely getting, the bank account for your business, put all your commissions in there, put all your expenses in there. And if you need the money, you pull it out in big chunks, like 1,000, like nice round numbers is what I say, $1,000, $2,000, $1,500, whatever. So you say, oh, that must be my distribution, is what it's called. Those are probably the two biggest things. The biggest, honestly, is the LLC S Corp situation, because that is a huge tax savings. One of my presentations I do is about that whole thing, and I have a case study that shows a man that makes $60,000 and he saves $5,000 in taxes just by doing these things. Yes, ma'am.
I talked to my accountant last year and he said, cause we're trying to buy a rental property, he said, unless you have 4 or 5 properties, unless you're, with your work, you're netting like 100,000 a year, don't bother with an LLC because you can still get the same deductions.
Not true. The taxes are different. Let's talk. Yes, ma'am. Yes, ma'am.
Do you have time to talk about QBI?
Shortly, yes.
Yeah, shortly.
Just very shortly.
Yeah, cause I haven't been taking it. It's been out since 2018 and
Why not?
because I just found out about it.
QBI?
I just found out
Qualified
about it
business.
this year.
What is it?
Do you have an accountant that you work with? No.
Yes and no. Most of them don't know what I'm talking about when I go back. I'm like, hey,
So-
you know what? Yeah.
The short story is QBI is qualified business I don't know what I is, income deduction. It's 20%, it's a 20% deduction for your income from your business. There are some limitations.
Yeah.
But it's a 20% deduction, literally, on your tax return.
Based on
the-
what? Yeah, on your
Based on
net.
your income.
On your income.
But if you make over, I don't know the numbers off the top of my head, I think it's, I wanna say 250 or 300,000 for your entire family, for yourself, if you have a spouse, whatever, then the QBI starts to go away. Things like me, like a CPA, financial planner, and professional service type stuff, it goes away completely for us at some number. Most people get a reduction. Most other, it's qualified trade or business for it, so. In your industry, it's available.
Yeah.
No matter how much money you make, you get a little bit.
So your net is 60,000, right? Is what I understand, and I would put that 60,000 with my husband. Then 20% of that 60,000, which is 12,000, I would pay taxes on 48.
That's right. Depends on your husband's
I
salary.
guarantee
Depends on your
you,
husband's salary.
right, I guarantee you, when I was talking to this guy who studies all this stuff, he said 95% of real estate agents don't even know. I've
Really?
never heard of it.
All of mine
I
take it.
have not been taking it.
Every single one of mine take it.
250 is the max household.
I don't know the number off the top of my
Okay,
head.
that's fine.
Yes, sir.
It's called QBI.
What are you advising on BOI filing?
So the BOI, yeah, that's, I think I took it off my list maybe.
Yeah,
BOI,
not a thing anymore.
it is in litigation right now.
Yeah.
Some people came forward and said this is not constitutional.
Yeah.
BOI is basically a registration for businesses to the US, or with the government. I don't have a problem with it because I'm like, you have my tax returns, I've set up my business with you, you have my federal ID number, you got all my stuff. I advise my clients to do it. The BOI, you had to have it last year, the entire year, any company that was in effect before the first of 2024 had the entire year to do it. I read in one of my trade journals that by December, like 24% of the businesses in the US had signed up for it. And but I was like, and then they started litigating. And they litigated in December, and for like 3 weeks it was on the table. And then they said, okay, it's still valid, you have to do it by January 15th. And then they put it back, and then they pushed it again. And and I actually looked this up, as of January 31st, it's still on hold. I mean, the penalties, it's like almost $500 a day penalty if you don't do the registrations by the time you need to.
It takes about 5 minutes.
Yeah, it's not hard to do. I'll do it for you for a fee.
QBI for 24 for single is 191.9 and for joint is 383.9.
Oh, right, what are you talking about?
QBI deduction, the income limits.
Good to know. So,
Is that
but yeah, I
close or
advise
not?
people to do it, just
I
because.
was told that if your deadline is not passed, for example, like because it was being pushed back.
Yeah.
You don't have to do it until that deadline actually comes into effect.
That's true, that's
So
true.
right now,
It's not- you
if
don't
you
have to do
file
it.
You're not even.
That's correct, you're right. But I was just like, they have all your stuff anyway. You're not giving them anything they don't have.
And
All
that's
it
the
is-
problem with that.
I know the problem, I get the
Why-
big
why do
brother
you
part of
want
it.
more information from you?
I think it's,
Yeah.
it's not just for you, it's for who's with you. So like if you have a LLC and you've got multiple partners, and some of them are not US partners.
That's what it is.
That's what it
That's what it's
is.
for.
They're
I
trying
don't
to
like
cut
it.
down
It's
on
not for us.
foreign partners that are taking advantage of US
Tax
tax dollars. That's right. So, I mean, I kinda like that idea. I don't want, I want my tax dollars to go towards me and my family. So, anyway, that. Again, they're not getting anything they don't already know. I mean, even if you're talking about the partners or whatever, if you file a return, you've got the K1s. They've got those K1s, they've got those numbers, they got those TINs and addresses and foreign addresses, and you do an F-bar.
Yeah.
You know, all of that, they've got it. You're not giving them anything they don't know. So, anyway, but yes, right now it's not there, it's not needed, it's not required. So. Alright, we got 3 minutes, any other questions?
Yes, so if you have been taking the QBI since 2017,
Mm-hmm.
do you recommend that we go back?
Absolutely,
Oh God,
but you can only go back 3 years.
okay.
And you need to do it soon because, so, let's see,
It expires the
21.
end of
Yeah, we can go back to
25.
21.
Yeah, 20.
Is there a cap on that as far as like if you file jointly?
301.
I mean, it starts to phase out.
Me.
I mean, we can look at it.
Yeah.
I'd be glad to help you with that.
Okay.
Of course.
Of course.
I do all this stuff. I mean, people say, well, what do you do? I have a real estate niche. Okay, I deal with agents. I have literally hundreds of agents and contractors and investors and people that are in the real estate arena. I love small business. I'm one. Small business. I will coddle you, you're like my little babies. I wanna help you. So, but that's where I am. That's why I'm here and why I come back here every
Now,
year.
do you also do payroll?
I do payroll. I do owner payroll, yes. And I do like 3 or 5 employees. I think my biggest client, right, with payroll has 12 employees. I don't wanna do any more than that. I do payroll, it's a necessary evil, because part of payroll for you is managing your tax liability for the year. I
So
want
do
my
you
hands
mind
in it.
sharing what are your fees, please?
I have different fees for different people.
Okay,
Let's talk.
Okay.
Different fees for different
I just will
Not
ask.
people. different fees for different things, like payroll is different, tax preparation is different, consulting is different, IRS representation, they're all different. But I do bill by the hour, I do have back office staff. However, if you work with me, you talk to me. I will not hand you off to my staff, my staff are not client facing.
You have no plan to retire anytime soon?
No plans to retire.
That's a good question.
No.
Get all in, they're leaving.
What percent of your clientele is real estate?
Probably 60 to 70%.
Oh, good.
That's important.
I started with real estate. When I started my business, I was working in the regional firm in the area. And I was like, oh my God, I'm like, oh, this is the thing I wanna do. I don't play well with others, so I wanna do my own thing. So I started advertising in my neighborhood and one of my very first people was a real estate agent. And she's still my client. This was in '98. So I kinda got into that arena with her and she brought me into her to do stuff like this, to speak with her agents. And I love you guys. You're so creative and I'm not.
Having said that, what you just said, so we're creative, we like our buyers, we're on the, like, our feet are on the ground, we run, and we like doing that. We don't like
I
doing
know.
that.
Yes.
How do you motivate people to do that? Like agents, like I need to hear some motivation.
Well, I tell you things like, well, as long as, for every mile that you write off, you know, if you're writing off 30,000 miles and you've noted it, that's almost $20,000 of deduction.
Jesus.
Which that's $7,000 of taxes, $8,000 of taxes. Very generally. It's about money. Let's talk about money. The seminar that I do, or the presentation I do with the LLC thing, you know, you pay me $1,000 and you save $6. Are you, is that okay with that?
Yes.
So, I mean, my fees compared to the things I can do to help you save money are hopefully minor.
Just like us.
Just like us. What's in it?
Exactly.
So,
Last question.
the QBI, like, I've never heard about that.
Thank you.
Maybe I was getting it and
Let's look on your
didn't
tax
know,
return, or I
so
can
we
look.
just need to go back and look at our tax returns. And that's what it's called on the tax return?
Yes,
Yeah.
QBI.
Okay.
Qualified business, I. I don't remember what it is, QBI, because I call it QBI, you know, I like,
Yeah, that was actually one of the
Qualified
big
business
things,
income deduction.
thank you.
that was one of the things Mark King talked about this
It's great, I mean, it's a great deduction, and hopefully it won't go away this year. 'Cause it may, I led with this year, 2025, there are many things sunsetting,
what's the Augusta rule?
I don't know,
That was something else he mentioned, but
I have to look that up.
But for our purposes, we should still keep track of what our expenses are, keeping in mind, you know, everything is staying the same until it doesn't.
Oh, yeah, no, don't change anything because you think the taxes are changing. You can't do it that way. I don't even look at tax change or tax proposals until they're signed into law. People ask me, I'm like, I don't know, because it's not in law yet, because it's gonna change. When it's signed into law and it goes in the tax code, then I will adhere to it. Yes, ma'am, last one.
Okay, I'm sorry.
5 minutes ago.
Coming back to the keeping the receipts, I'm just thinking that to print out, it will be good if we can print out every month our bank statements and just the time which are the, like, most of the time I use my credit card for pay my everything related with my business.
You have a separate bank account for your
Yes,
business?
I do.
Then you should have very few personal,
Okay. so I
very
don't-
few personal.
Oh, no, I don't use it for my personal.
Then, yeah, you don't have to print it out even, you
But what
can
about
put it
if
as a
the
PDF.
IRS wants to come and review everything?
It's in your bag.
It is in my bag, yeah.
I mean, I
So I don't have to,
I print my statements to PDF and I have a folder,
and just put it on
When I
your,
put it
but
in
not
my-
the receipt, oh.
Yeah.
I'm
you
good.
know, I don't, I try to
Only you
stay
need to put it
true.
in categories, like if you need to categorize, like.
Well, that's where
market-
something like QuickBooks Zero,
Yes.
something like that will help.
Yeah.
Alright, thank you for your attention.
Thank you so
Thank
much.
you.
Thank you so much.
If you would like to speak to me, please call me and tell me you're in the seminar, or I have a few minutes right now, talk to somebody, a few people.
Wait, we're fine.
We can do it, let me grab my phone.
That's what. So I did get, like, in my so every year my CPA sends me a plan, which I never use.
I would bring up
And I just write.
Which is really good, but I think I like this other one
And
better.
I keep track of the money.
You should.
Quarterly taxes. I got a beginning, and end, and I calculate all like.
So this is my tax report for last year.
And I just keep saying. And if I'm
So this,
and I'm trying to figure it out, you know.